How does the pandemic reshape the real estate landscape? A little, a lot, dramatically?
It's very clear that most likely rates stay low for a while. So that has to inform your long-term view of will you invest in property, and that's what kind of property. So there are the major food groups of real estate, like hotels like airlines and cruise ships, the most impacted. We were asked to close our hotels in major cities. Then they shut down domestic and international travel. International and domestic was cut back. So cities like New York or Los Angeles, Chicago, New Orleans, big meeting cities with big convention centers, that business can take a while to come back. And until they turn on international air travel, you're not going to see a big resurgence in those hotel markets. On the other hand, drive-to markets that are mostly domestic, and even weekend business where people can get to a hotel on the weekend, that business is coming back very quickly. And in the drive-to markets and the low-end hotels that are more like surrogate apartments, we're running 84% occupancy in a 200 hotel chain, 24,000 keys. And yet our hotel in Los Angeles is shuttered. Our hotel in New York has no demand whatsoever. And in Miami, where we reopened a hotel recently, for the July 4th weekend, we'll run 70% occupancy. And everyone is driving. Vegas was the hotels open to California drivers and other people who are driving the market. Most people aren't flying. So it'll be a while, and that's hotels. They'll be better only when we probably have a vaccine and air traffic returns to more normal levels. And groups, businesses are willing to book conventions. And what will be the long-term impact of Zoom video on group meetings? Well, I don't know how they certainly will impact the rate of growth, and perhaps they'll cut group travel for a while. So office, I'm not worried about. Office tenants are paying. I don't think people enjoy working from home. There are geographies like New York City I'm worried about office, but really for other reasons. And then retail is like the 9/11. It's a hurricane, and it's everyone who didn't have an Amazon Prime card now has one. My 86-year-old mom figured out how to order a thermometer online and have it delivered the next day for free.
Why do you say you're worried about New York? Is that the market that faces the toughest climb out of this crisis?
Yeah, so New York took a 1-2 punch. It really, obviously was the epicenter of the COVID experience for Americans. It was the worst hit region of the country. And I think when people in New York look around the country and they say they don't understand what they're doing in Georgia or in Iowa or other cities, that some states that barely shuttered, they're looking at it from their experience in New York, which was pretty bad. And I think also the rioting after George Floyd scared a lot of New Yorkers. So I think people realize that the pandemic seems to have been spread perhaps by the density of New York and the need to take public transportation. And it was a scary time for New York. I think executives are now also looking at all of the other factors that have kept them in New York, including their tax rates. And I think in general for Starwood Capital, my private firm, we've really favored recently the investing in the red states, not because it's not a political commentary, but the red states are growing, whether it's Florida or Texas or Tennessee. The states with lower taxes are just adding people. The states with higher taxes are actually losing people. And they're voting with their feet and their cars.